Beat the estimated tax penalty, a general guide for taxpayers. Hey everyone, welcome to today's video where we break down a topic that can save you thousands of dollars, avoiding estimated tax penalties. If you're a foreigner, freelancer, business owner, investor, or even a W-2 employee with extra income, this is for you. Hi there. If we haven't connected yet, I'm the digital assistant for Carlos Mario Lopez, CFO of Financial Services LLC. I'm here to help you access reliable tax information sourced exclusively from official websites like the IRS and Cornell Law School, while Carlos Mario focuses on serving other clients. Why estimated taxes matter. First, what are estimated taxes? Think of them as a pay-as-you-go system for income that doesn't have taxes automatically taken out, like freelancing, investments, or rental income. Estimated taxes help you stay ahead of your tax bill throughout the year rather than facing a huge payment in. Paying quarterly helps you avoid penalties and manage your cash flow. The estimated tax advantage. The big advantage? Instead of one massive payment at tax time, you break it down into 4 manageable chunks across the year, quarter 1 through quarter 4. It's like putting taxes on a smart payment plan. What are taxes and estimated taxes? Let's rewind for a second. What are taxes? They're what we all chip in to fund things like roads, schools, and healthcare. Now, estimated taxes cover income tax, self-employment tax, like Social Security and Medicare, and sometimes the alternative minimum tax for higher earners. If you're self-employed, this definitely applies to you. Example, calculating taxable income. Here's a quick example. You're a freelancer who made $50,000 and spent $10,000 on business expenses like a laptop and supplies. That leaves $40,000 in taxable income. If your tax rate is 20%, you owe $8,000, ideally paid in 4 $2,000 quarterly installments. Do you need to pay estimated taxes? So, do you actually need to pay estimated taxes? If you expect to owe $1,000 or more when you file, then yes. This includes self-employed people, business owners, investors, and even W-2 employees whose withholdings aren't enough. But if you had no tax liability last year, were a US resident all year, and didn't need to file, you're off the hook. Special rules apply to farmers, fishermen, and high-income earners, so always double check. How estimated taxes work and safe harbors. Estimated taxes are due 4 times a year: April, June, September, and January. Miss a deadline and you could face penalties. Luckily, the IRS has safe harbor rules to protect you if your estimates aren't perfect. Pay 90% of what you owe this year. Pay 100% of what you owed last year. Or pay 110% if you made over $150,000. Stick to this and you're penalty free, even if your final number is off. Smart tricks to fix missed payments. Missed a payment, don't panic. There are smart ways to catch up. If you're an S-Corp owner, pay yourself a year-end bonus and withhold 100% for taxes. W-2 employee, adjust your W-4 to increase withholding. It can be retroactively applied to past quarters. Have an IRA. You can take a distribution, withhold for taxes, and redeposit within 60 days to avoid taxes and penalties. These are legal, strategic moves to get back on track, paying taxes and staying penalty-free. You've got multiple ways to pay: online, through your IRS account, EFTPS, by mail, even at retail stores with cash. The key is to pay the right amount by each quarterly deadline. Penalties are based on how much you underpaid, how late you were, and the interest rate, currently around 7%, which can feel like 11% if you're a high earner. Avoid them by sticking to safe harbor rules or qualifying for a waiver if your situation qualifies, like disaster victims, retirees, or uneven income earners. Never miss an estimated tax payment. Let's keep you organized. Here's how to stay penalty-free. Set calendar alerts 2 weeks before each deadline. Use a checklist to track your payments. Estimate your taxes based on last year's return, or Form 1040-ES. Adjust if your income changes mid-year, and use IRS resources like Publication 505 for help. Pro tip: if your income varies a lot, use Form 2210 to pay based on when you earned it. That can cut down your penalties. Take control of your taxes. Let's wrap it up with your game plan. 1. Mark your quarterly tax dates: April 15th, June 16th, September 15th, January 15th. 2. Estimate your taxes or consult a tax pro. 3. Set reminders so you don't forget. 4. Adjust your W-4 if needed to increase withholding. 5. Use IRS tools and resources to stay informed. Estimated taxes are just like paying your bills in smaller pieces. Less stress, no penalties, more control. Thanks for watching. If this video helped you understand estimated taxes better, give it a thumbs up and hit that subscribe button for more smart tax tips. Got questions? Drop them in the comments. I'd love to help.